All right, you guys, we're back, dude. Crazy. All right, so we got FOMC coming up. Talk about the ways to trade. All right, so the announcements probably come out. Probably get about a 25 basis point cut. All right, we're back, dude. My encoder was jacked up for like a hot minute there. All right, what's up? Welcome back. Let's go. All right. Okay, so no, right out the door, I'm expecting a 25 basis point cut, maybe 50. We'll see. So the news should come out. Let's see if we get anything. Open up financial juice. I never trade the event. We're gonna let it move. It's likely to go up. Looks like interest rate. A quarter of a point drop. 25 basis point cut. All right, cool. That's what we expected, right? So that's good. Oh. So Lead Trader Funny is gonna do a 90% off discount. That's kind of cool. The 25 basis point cut. That was kind of what was expected. Yep. What color is J Powell gonna wear? The better bet. Okay. The expected thing, the market went up, went down, came back to normal. So we price in the expected. There's nothing out of the ordinary there. They're doxing the dude on FTT and people filing complaints and stuff. The CFTC, well, they need to, and you obviously need to be investigative of something of that magnitude. All right, guys. So today, the expected thing is to happen. We know the Fed's going to cut up to 1 full point this year. They've already cut 50. Now they cut 25, which means next month is another 25 basis point cut. That's almost guaranteed right now. But Fed Funds Futures pricing that in right now. So the market is on path. There's no surprises. So you don't expect FOMC to actually move anything. So what's going to matter now is the press conference in 30 minutes. We'll sit here and watch this to see what's going to happen. Press conference is going to be what actually moves this going forward. So we're going to look and see if we get anything as far as like a dip. You guys know me. I'm looking for dips to buy way down in there. I'd like to see the press conference start to move this market, but I don't think we're selling off at all. It's the strongest bull market we've seen in a long time. DD greater 90%. Doing great. S&P resilience is negative, so the S&P could go to fill the gap at some point, and I'm back. If it hits that, boy, I'm long and heavy today. So no trading in FOMC. Unfortunately, that was a wash. That kind of sucks, but hey, nothing big to come out of this. What's up, Ian Holla? What's up, guys? Don't forget, hit that like button. We'll get started here. All right, so I bugged the guys at ETF about this, and I told them, hey, it sucks what happened to Fast Track. Really, it really does suck. And there's people out there that have been kind of screwed over by that. And honestly, people still want to trade prop firms. No, y'all don't want to get your service interrupted and stuff, right? Kind of unfortunate to be rug pulled. And I know it burns. I know it stings. And honestly, just letting you guys know, the reason I like ETF is because a bunch of their team, I'm talking their employees, their higher ups, actually used to work for me before they went and started a prop firm. I personally vouch for them. The integrity is there. People that work their butt off. As a matter of fact, their community manager used to be my community manager a long time ago. Quality people that do not have a bone in their body to go out and screw people over. People that worked for me tirelessly for free to really make Rocket Seer the community that it is. I know the integrity that comes with that. That's why I stand by those guys. They offered a discount so that people could check out their service in light of this. I was like, fast track trading is going to be a lot of people that are homeless, and all the other prop firm vultures out there are going to try to scoop them up. And I said, you got to do the same thing, because it sucks for them to fall into the other hands of another fast track. But sucks that happened. But anyways, they're doing a 90% off thing. You guys use our link and check out. That's it right there. And if you use our link and you get that 90% off to go with it, trust me, you'll still get that code trust90 and they'll hook you up. If you use our code, you'll get entered into our drawings, which can kind of give you, you know, other stuff that we offer for free just by if you're going to jump into it. So check it out. All right. FOMC, 25 basis point. Nothing out of the ordinary there. Exactly what happened. Going forward, Nasdaq futures, I'm looking for some entry points alongside. S&P entry points on the long side. Nasdaq does have a scoop up point right here. Best trade is there. Decent trade is here. On the S&P, 59.70, 59.47. Those are my entry points on any pullback and dip. I'm not longing from here, even though the market is going up. Ooh. Nasdaq, similar boat. Except that Nasdaq's bounce points are going to be there. And it just announced that they can give a refund. That would be appropriate. Oh, dude. People are like doxing the CEO online. Wow. Okay. No way. Okay. Hold on. I can't share it on the stream. I'm not going to be that kind of person here. You know, obviously, they made a bad business decision. I'm not going to accuse anybody of doing anything wrong or being illegal. They just made a bad business decision. Bad risk model. And things got out of hand over there. I get it. Sucks what they did. I'm not going to dox this guy in the meantime. I do want to see how big his house is. This guy's living in a fucking mansion off everybody's dollars. Oh, he lives in a modest $1 million house. Okay. Okay. Making sure. Wow, they are doxing this guy heavily. People are angry. He lives in a modest $1 million-ish house. Seems all right. Seems normal. Not like he's out. I would feel a lot angrier if this person was living in like a $10 million house, driving a Ferrari. You know, what happened over there is really shitty. They're offering refunds. That's the best they can do. At best, everyone gets their money back, and then that's good. And you just lost a month worth of work, and that's a slap in the face, and fuck that. Oh, he's posting all his McLarens and Ferraris months ago? All right, well, fuck that guy. Okay, well, yeah, no. Fuck that guy, then. Piece of shit. Okay, never mind. No, a prop firm went under. No, seriously, like, fuck that guy. He was driving the McLarens and Ferraris. While they ran a really lucrative, not so tight risk model that allowed the company to just experience some, you know, here's what it is, right? Let me teach you the mechanics of a prop firm. Here's how it is. It's actually pretty easy to start one. You can start one too if you have a funding source and a license to trade Tradevate. All you do is you have a company with an overhead. I'll put a giant O here. And your overhead has a cost. You have money coming in from the eval. You have money going out from sim to funded. And money going out overhead, which includes marketing, staffing, whatever. And you wouldn't be a company if you didn't turn a profit. So amount that goes out must be less than what comes in. It's easy as that. The amount of people that pay for these must be greater than the amount of people that get paid out from these, plus however much it takes to run the company. I am the CEO of 3 different companies. one corporation and 2 other LLCs. I wouldn't be running a business if it didn't turn a profit. So this is the model. However, you must create this with a certain type of risk type model such that it ensures that this is all plus this is always less than this by enough. And if you do something stupid because you want to make a lot of money really quick and you go ham on your risk and all of a sudden there's a big blowout day, like everybody bets one direction and the market just happens to do that. Well, everybody bet that, which is unfortunate, and you got caught with your pants down and you become insolvent and everything falls apart. So you must design your prop firm such that your risk does not allow you to take too much risk so that you can cover your company overhead. Company overhead includes McLarens and Ferraris, and your paycheck is that large, then obviously your risk model is very thin. Of one of the top 10 prop firms out there to create a white label prop firm thing to sell to other people who want to start prop firms. We had several meetups just to discuss this very thing. And ultimately we didn't go, that didn't go through, but it is so lucrative to start a prop firm. It's extremely more lucrative to start a template prop firm and platform where you can just get any influencer to start a prop firm with a funding source. And it's so plentiful. That's how I understand the risks of this, because the risks were discussed when we had our meetings. As watching you talk, it says there's a lot of white label platforms. We're getting close to the top. That's what I said the other day. How do you know the market's topping out? When everybody you know is a trader, right? When your grandma's calling you, have you heard about the Bitcoin, Sonny? My friends at the church were buying it. I want to invest as well. I heard you're a trader. Oh yeah, grandma, get it. Okay. When your grandma and her friends at church are buying Bitcoin, that's the fucking top. That's the top of the top. That's the time's coming down when everyone's doing it. So, you know, because people knew I built white label trading platforms for people for years. We've been doing this as a side business. So someone approached me to create this thing, and it was to create, because we have server side architecture, and that was very important to them, because they had some copy trade things that they want around server. And we have this really awesome server side architecture that delivers indicators to trading platforms. The only trading platform in existence that does this. We actually invented this. So it was very like, yeah, we'd like to have that kind of technology in our thing, and you guys build great platforms, blah, blah, blah. We'd love to work with you. And we discussed it, and we discussed the feasibility of it. I learned everything about how prop firms work. I know everything about the space. Too much. But like, that's really, we could be honest with people. You guys are playing in what's like a casino. The casino has an edge, but you can have an edge and beat it. But the only company I ever found that like believed in traders learning was the guys at ETF. And a lot of them came up through our group. Like I said, a lot of them were our members, our lifetime members. Some of them worked for me. And then when they went to work over there, because they got a paycheck, that was it. When they were working for me, it was a volunteer thing. They were like mods at our group. This is before we were Rocket Scooter. And they were like, you know, there's this company that's starting up. We're going to probably go work over there. No hard feelings, because we're going to get paychecks. I was like, ew. And then when they launched the prop firm, they reached back out and contacted me. They're like, you know, we actually want people to learn how to trade. We want good traders. And when they fail, you know, a lot of times, you know, the prop firm model, nobody's going to lie. It's clearly got to squeeze out as many traders as you can to pay the winner. That's the name of the game. It's a casino. They all do that. Casinos wouldn't be in existence if they paid out more than they took in. So, right, we get that out of the way. But their thing was, after traders lose, we don't just want to be like, taking the money and keep the rest. They were like, when traders lose, we want them to learn trading. We really do. We actually want a longer commitment and, you know, a longer term customer. And that's where you step in. We'd love for you to train our traders to help make them better and make better decisions, because our goal is to promote as many of them to live funded accounts as we can. We actually want to find great traders and put them to live. And I said, that's great. You actually want people to get good at trading. Yeah, we actually want people to learn how to get good at trading. And so That to me was really cool. And the fact that they asked me to come and assist with that was even better. So. Yeah, ultimately we didn't go build the prop firm template thing, but to white label that technology to sell to other prop firms, you know, basically build a competitor to trade a bait. Well, we didn't do it. Pulling 5 evals to learn this much more. Stomach able than 5K. Okay, here's the rule. Nobody trade during FOMC. Here's the second rule. Everybody wait for the press conference. That's when it gets hot. Too many new ones are trying to rush to the top instead of being a solid foundation. That's it. And that's why I tell you guys, ETF is the solid foundation. ETF and Top Step, to me, are the only two that provide a solid foundation. Even though I work with ETF, I also say that about Top Step. I've never personally used them, but I've heard great things about both of them. So to me, that's your Coke and Pepsi of prop space. And what I also like is the guys at ETF always ask me questions about, like, they ask me a lot of general questions just as like a consulting kind of thing. What do you think about this? What do you think about that? And so they're really curious about how the perception is in the space, and they want folks that have experience in the space, trading experience, you know, to be part of it. It's like, you don't feel like it's some detached bro in a McLaren trying to rake in everyone's money. It's like people that are in the community, that have been in the community, really want a community-based thing, which I've always thought was kind of cool too. Somebody says, apart from trading, I'm so knowledgeable. Well, it's really... I read a lot. I talk a lot. How'd my experience with Apex go? I didn't have a bad experience with Apex either. Apex was clean. Payouts are clean. I don't want to rob too much credit from Apex too. They definitely, as far as my experience goes, I haven't seen shenanigans firsthand. I've heard of some people having some minor things with them, but I would say Apex up there as well. But here's the rule of thumb. Ready? The harder it is to get funded, and I'm talking, when I talk about hard, they're not like really hard or really easy, but the differences are subtle. This might have a 4,000 target. This might have a 2,000. One slightly higher. This one might make you trade 15 days. This one's 10. But the harder or the longer it takes for you to get there, the harder it is, the higher probability that you as a good trader will get paid out. If there's this crap I'm seeing, hey, get funded in a day, or like no evals required, funded your first trade, shit like that, it's a time bomb waiting to happen. You might be lucky if you're one of the first traders in there, but if there's a market blowout day, like an election or a Fed or something, a market just flies one way, that company's insolvent, nobody gets paid. This is live and in real time. All right, guys, hit that like button. Let's talk about today's setup. Okay, the press conference comes out. That's when Powell's going to start talking. Typically, when Fed happens, this happens every single time. Never trade into Fed. Rule number 1. Always be flat. This is rule number 1. We teach this. Number 2, 0 to 5 minutes, you usually get the first knee-jerk reaction. The market goes based on the result. If the result's expected, typically you do something and pass back to where you started. If you end up back where you started after volatility, it means it is priced in. So anytime there's an event that moves and returns right back to the price before the event, it means the event was already priced in, and usually that's the case. Wall Street usually always gets it right. So FOMC was priced in. Minute 5 to 30 is people pre-positioning, now betting on the next FOMC. That's the best part about FOMC in any kind of event. Today's event priced in. From this moment forward, all that matters is next month. Right now, people are immediately speculating on next month. Do we all get that? Nobody is betting on what's, okay, Jay Powell raised it 25, lowered it 25. Right now, it's already off the table. If you trade somewhere and back to restarted, it is off the table for good. Now, all ears, I'm going to draw an ear. These are gigantic ears for whatever is an elephant. All ears are listening to signs of what next month is going to be. And then when Jay Powell starts talking in the press conference is phase 3. So phase 1 typically does this. Phase 2 tends to kind of move to some place to anticipate that. And then the press conference is where shit hits the fan and people react towards the next thing. Now, let me tell you, I predicted the FOMC rate cuts pretty accurately. I said today they're going to cut it 25%, 25 basis points. Next December, when they do it, they will cut 25 again. They will hit their target of 1 basis point this year, which means it's expected. So nothing Jay Powell is going to say is likely to deviate from that. But what you're going to listen for is for him to give signs of how rapidly they're going to cut rates next year. Something looks like Mr. Potato Head. Right? So the question is not, are they cutting rates in December? Because they are 1/4 point. High probability of that. The question is, what about January, February, and March? So let's examine the dot plot really quick. Comes out all the time. Right when the announcement comes out, don't they release that? Where's that dot plot? Fed funds futures price in another 67 basis point cut for 2025. That's good to know. So, yeah. Muted response to FOMC, but we all expect it to happen. Overall, the market's bullish. You can use Rocketscrew to determine that. Open up any ETF. Click this button at the top. Click this thing that says monthly map. The monthly map will tell you the state of the market. This is going to predict the next 3 months of the market based on the distribution of risk as it is today. Here, let's take a look at this, okay? Let me teach you how monthly maps work. These gray boxes and dark gray boxes are monthly maps. Monthly maps is a really cool guide. It will walk you through. Get this here. Training masterclass. So what we do is we look at the options as they're spread out over the course of the month. Or the course of the next 3 months. And this little checklist will tell me what we're seeing going forward. Okay, I'll put it right here. All right. What you got to do, and you can do this for any stock or any ETF or anything. I'm trading S&P futures. Let's see what SPY looks like. Checklist 1, 2, 3, and 4. Number 1. Are we in a bull zone or are we in a bear zone over time? Dark gray is bull zone. If you look at the colors, we are clearly in a bull zone over time, and this goes all the way through January. So number 1, we are bullish through January. This market's not coming down. Sorry, bears. Number 2. The bottom of the bull zones are sloping down or sloping up. You have different things happening. The bottom of the bull zone is, for the most part, sloping down between now and January, which means bulls are longing more. So bulls longing more. They're becoming more bullish. They're not just bullish from here. They're going to long more over the next 3 months rather than sell their position. If this was sloping up, you'd have bulls exiting positions. So this is based on the options. So bulls are longing, taking profit, longing, taking profit, longing, taking profit. The market's just going to move up in waves. Perfect. Number 3. Bear side, same thing. Top of bear zone, sloping down for the most part. And then here, one would argue that it's sloping up. So through end of the year, bears, which are people that are short the market, are exiting positions, i.e. short squeeze. Bears covering. So bulls longing more through Jan. Bears covering through December. And then starting to short a little bit more into the new year. Okay. 4, the state of the volatility and the liquidity of the market. How liquid is this bull market? If the zones are fanning out, then your volatility is increasing. If the zones are pinching in, your volatility is decreasing. So here, there's like no space except for here and here. So we have some volatility next week, volatility end of the month, and then volatility through the end of the year is very possible. So bullish month with possible volatility. So the market is very sensitive. Bullish, but sensitive. It's going to be very emo. Pockets of volatility all through December. Sensitive to news. Okay? So anything so basically it's like a strong bull market, but anything bad that comes out, the market's going to hate. Pretty cool, right? That's what monthly maps are, and you can do monthly maps for anything, but this is going to tell you the S&P is bullish through January. Sorry to break the news to you, bears, but this is how Wall Street is positioned against the house. And monthly maps do not lie. That's the positional risk distribution of market maker positions. Now let me show you something cool. I have used monthly maps for years to pivot the market in the big major pivots. And not only that, I tweet about it. I love showing this one off. Let me show you this one. Let me zoom in on this. This is the S&P over the course of time. Here's COVID. This was like 2022, and I made these tweets. I can't open image in new tab. There, we can make this bigger. All right. I made these tweets along the way, and I used only monthly maps to pivot the market. After COVID rallied up here, I said bull market can double next 3 or 4 years. S&P 6,000. And guess what? Come on. Who nailed it? Come on, boys. When it's 3,800, I said 6,000. People thought I was a moron. I was right. Okay, number 2. These are the dates of the tweets. January 5th, 2022. On this day, not that month, not that week, not that week, not those months, not those weeks, not those weeks. This day, I finally called for a correction using monthly maps. Futures open suggests more downside. This is the first time in as long as I can remember that I'm seeing a possible short-term correction. And on this particular day, the monthly maps showed a top in the coming months. Volatility is going to take over this month and likely this quarter. The sidelines would be a good idea starting now. How'd I do? That day is the first day of the move down. Right here, that exact tweet as well. Here's to a 2-month bear market rally. We rallied for 2 months exactly from July to August, end of August. Monthly maps indicated that there was a bull position and shorts were going to squeeze, and we got that for 2 months. Again, the bear side was sloping up for 2 months. Or sorry, sloping down for 2 months. We're here. Shorts are squeezed, sloping down. Here, October 17th, 2022. Not that wave, not that wave, not that wave, but this exact day. When everybody said the sky was falling, I'm calling a bottom for the year. Exactly on that day. October 17th, go read the tweets, still there. And rally through mid-January. And I was on a podcast. I got invited to speak on a podcast because I was the only bull in the room. And everybody in there was a fundamental podcast. Everyone was there. Markets Mayhem was there. All these fundamental guys were there. They were all there. And they were talking about the market and the mechanics, the market looking bad. And I was like, guys. Presser's live. Okay, so ready to go. Anyways, I was like, yeah, no, it's just the positions are bullish. You're like, it doesn't make any sense. How can it be bullish? Everything's bad. And I was like, I made this talk on monthly maps, and it's showing that the shorts are going to squeeze, longs are buying. And actually, it's been that way for the last 2 months, and this is the day that fulfilled that. And it's probably going to be bullish through quarter 2. And people thought I was insane, and they actually were like making fun of me. And we were bullish through quarter 2. And then actually right here, one final thing, Presser's live, let's get it. I said, oh, And when quarter 2 came around, I said, yeah, actually, monthly maps are still strong and bullish. We're going to rally through October. And here I said the recession is over. And again, people are calling double top on the market. It's going to crash. And we have not stopped since then. Monthly maps are bae. And this is like everyone's favorite tool here is QQQ. Bull zone, bull strengthening, bear strengthening. The NASDAQ is going to rally until the end of the year. This is the most boring FOMC ever because it's everything you want to happen was happening. But monthly maps is by far one of our most ingenious creations here. Because it's looking at how options are laid out and the actual dynamic of the risk of those options over time. And basically, the map just shows you how positions are changing over time. It's pretty simple. If bulls go deeper in the pocket, then the calls that are in the money are going to be forced to be longed harder. Let's get that press conference, though. Here's what I want you guys to do. If you don't use Financial Juice, use it. It's free and it's awesome. They're going to highlight like all the red text is highlighted in fancy stuff that Powell says, right? So let's go listen to Powell. Let's go listen to him talk about
as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from...
Let's listen to him talk about observing the labor market. Let's listen to him talking about Treasury bonds. Let's listen to him talking about CPI, yada, yada, yada.
And stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5%.
So you're listening for clues on what they're going to do for the next meeting.
This further recalibration of our policy stance will help
So just remember, this is the target.
And the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time.
Have they released the dot plot yet?
We know
They
that
usually
reducing
do.
policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy
Yeah,
restraint
futures is pricing in the 25 basis point
economic activity
for next meeting, which we said. The dot plot suggested 1 full point this year.
target range for the federal funds rate,
We got 75, so we got 25 more to go.
the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals.
The labor market is not a source of inflation. Okay, so this is very important. So he's now telling you that the original source of inflation after COVID was something called cost push inflation, which was the cost of labor went up. Everyone got laid off, and then people went back to work. They wanted huge salaries to take the risks. So that was the initial source of inflation early on. Now the source of inflation, as he's testifying, according to the Fed, the labor market is no longer the source of any inflation pressure. So basically what he's saying is the effects from COVID are now over. Long story short. Which we also said the same thing earlier. Or like a couple months back. We were noting the same thing. The wages are back to normal. And we got all the reports that said that. FOMC's. I'm bored already. Are you guys bored? FOMC is boring.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
It's gonna be so boring.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that...
Are you worried about your job, Jay Powell?
The election will have no effects on our policy decisions.
That's what I said too.
As you know, many
That election's never going to change Fed policy.
who writes down forecasts in their job will tell you that the economy is quite...
Friends, can you mind smashing the like button real quick?
...past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for
I'll
the
be right back.
achievement of
Hold on.
goal variables, maximum employment, and price stability. I'll
be right back in like 2 seconds.
We don't speculate and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we
turn the music off, actually. This is kind of
bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle.
Really, I don't think it's going to get shocked today, so I don't think there's really anything to trade.
I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger.
So you guys, so ETF has a new code, right? Trust 90 for 90% off your evals.
Retail sales stronger. So overall, though, I think you take away a sense of
use our link. Hold on, let me give it to you.
To economic activity having
90% off.
Been diminished with the NIPA revisions in particular, and so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than
You might see the market try to maybe do a little bit of profit taking, but not going to see the market blast off today.
December we'll have more data.
They're not going to. Powell's not going to say anything that's going to like shock the market.
And lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that
How do they
shifted?
charge once you pass the eval?
Shifted
There's usually an activation
Can you go a
fee.
little bit of detail as to why?
For fast track,
Fill out an SEP, and I can't characterize one that
there is no activation
so I
fee.
can't really speak for kind of exactly where the
For the first month?
I
They
would
give
just
you,
for
if you
December,
pass the
we're
fast
gonna
track,
be-
they do no activation fee, I think is what it says now.
Looking at the
All the other ones is an $80 activation fee.
As you know, we're in the process of recalibrating from
So the fast track, they give you your first month free, by the way,
5.33%. After today's move, we're down 75
which I think is
basis
awesome.
points.
That's really the benefit there if you don't have to pay to flip it.
We're trying to
All right, so here's the upper target. Let's look for some downside move pressure, pulling back to some bull areas to take longs off of. I think the S&P. Problem is there's nowhere really to bounce off of. S&P resilience is negative, so the S&P could make its way down to here. There's support there and there. So I'd love for it to crash into that. I would grab that dip all day long.
I can't really update you on the committee's thinking.
60% chance we hold that blue line. Same thing in Nasdaq today.
Totally appreciate that. I guess when it comes to Euro,
I'm not shorting this though because we never short bull markets, but there's really no long setup here. A dip is a great long setup, so we're gonna wait for that.
See how things come in December. I mean, it's just
Russell today, I think has a lot more opportunity than the other two.
we're on a path to a more neutral.
Russell's the one that's been a little more volatile.
And that's very much what we're on. That has not changed at all since September. You know,
Russell making back to MHP. If this goes back up to here, that could be a long entry for me.
to look at to make that decision in December.
Go away for that.
Obviously, I'm not ruling it out or in, but you know, I would say
So boring.
you
VIX has a monthly liquidity map that's down. I mean, a daily liquidity map that's down. So VIX is just downward pressure today.
the SEP, so I'm not going to characterize, you know, where the committee would be.
Thanks, Howard Schneider.
But it's weird to expect the market to sell off. I don't, because everybody expected this FOMC announcement, right? Nobody expected it to be different.
The first paragraph, when you say inflation
T-Kit nailed it, yeah. Breaking MHP.
toward further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal.
So let you guys know, if you read what the chatbot's posting, we have a bunch of giveaways that we're doing. So tomorrow we're doing a really big giveaway.
Open the door to a December pause. Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you
If you're here in the stream tomorrow, we're giving away 3 free Elite Trader funding evals. All you gotta do is be here.
confidence was was our test for the first rate cut, right? And so we met that test in September.
November 10th, we'll be giving away 2 lifetime memberships to anybody that bought the monthly trial from November 3rd to November 10th. Lifetime. It's $4,000. So we're giving away 2 of them to make it 8. And the last one we're giving away for Black Friday, 1 lifetime membership for anybody that bought at least $250 worth of ETF eval accounts. You get entered into a drawing. Every time you hit 250, your name goes in the pot 1 time. So those of you that are consistently trading, use our code. And then we do the drawing once a month for either free month or free year or free lifetime. It's going to be like big prizes. With our group, you can get something for free. If you use our code, we'll give you free memberships, free platform access, all that stuff.
The point is to find
What's up, Shay?
the right pace and the right destination as we go.
I'm bored. This FOMC sucks.
Kind of uncertainty about that, and
I mean, but it's good. I mean, it's a testament of the bettering of the economy, you know.
sensible decisions as you go.
Jobs data is good. GDP data is good. Unemployment data is good. Inflation data is good. PMI data is decent. Initial jobless claims not showing big bunch of layoffs. Continuing jobless claims are still underneath the 2 million total, which is average in a bull market. Everything's right at par for the soft landing and
So we know comment on
continue to go higher.
And again, I don't have a lot more to say on what's driving bond yields. In terms of policy.
Should I wear my glasses like Powell?
Let me give you a sense of how this works in the ordinary case. Let's say Congress is
Do we look alike?
considering a rewrite of the tax law.
Congress is considering a rewrite of the tax code.
We would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it, and then we'd wait and we'd wait. And then
I personally like Powell. I think he's one of the smarter chair people we've had in a while.
the likely effects. There's lots and lots of
More
literature
hands.
on the effects of tax policy
Tax
changes
policy, more and more literature.
the economy. So we'd try to get smart on that. And
Try to
then
get
when
smart on
it
that.
actually passes, and you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep.
Did he just say we live in a simulation?
And then when it actually passes.
Did he just confirm the Matrix?
Model, along with a million other things. So.
Honestly, dude, I love Powell.
Many things.
He's like one of my favorite chair people. He's very intelligent.
A law change.
He says all the same things I say, which means he reads all the same data I read, which means he's a data-minded person. So
process.
I think I like that
And of course, the real
they're doing. I've always thought he's made the correct moves.
all of the policy changes that are happening. What's the net effect?
They didn't cut rates too quick.
Overall effect.
They let the market heal itself to not create a false impression on the stock market, which could have crashed the economy. They didn't raise rates too much and put too much pressure on the market
Constantly.
as they were trying to get things off their balance sheet. The Fed was exiting the problems that were being created by their lifting of the market since 2008. And now the Fed has kind of taken off the training wheels to let the economy go on its own. And we did kind of flounder a little bit after COVID. And now we're starting to take off, which is exactly what they wanted to do. And they did a great job because ever since COVID, none of us are getting laid off. And while, sushi and milk and bread and gas, like slightly higher prices last couple of years, imagine had they not done what they done and 20% of you lost your job. Good. So I love that they pushed the economy into the soft landing, or pushed everything into the soft landing we got, especially with Wall Street. They didn't move too quick. They did exactly what they needed to do. And as I said 3 years ago, we would be at 6,000 S&P, and in 3 more years, we will be at 10,000 S&P. Believe it or not. It's going to be faster than they did 4 years ago. So by the time Trump's presidency is over, we should be trading between 9 and 10,000 S&P. You're ready for it.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data.
Maybe we should make that call now.
The September meeting, including the revisions to things like.
I love when I make this tweet because half of the world tells me I'm an idiot. I need the history of it, so let's see how to do it.
Why do many cuts at all in this with this backdrop?
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing.
Let me find my old quote. When did I say?
Modest rate. And
Let me see if I bookmark my own quote.
we don't think to achieve.
Let me quote myself before I.
the labor market. Inflation has moved.
I like to
a great
requote
deal
my
from its,
requote my quote.
Higher its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision.
When did I say that?
In that process, overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as
When did I
policy
say
stance
that?
enables further progress toward our inflation goal.
We're gonna do another swing for the fence today. No, I said this
What
in
might cause you to pause rate cuts in December? What
bull
kind of
market going to
data
double in the
would
next
you
3 to
have?
4 years. That's what I said. Okay.
Thank you.
Okay.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff with QT. So we reach a point where.
Oh, dude, I forgot. I already did the call. Look.
Reaching the airport slowly.
In June, I did it. I even forgot. Look, in June, I did the same thing. In June, monthly map. I'm still on that mentality. Here's my big count. We're bullish from here in 6,000 by Q3 and Q4 latest. There's no stopping this rally unless big news happens. I already did it. I forgot that I already did that. Well, let me do it again. Maybe my 10,000 S&P call.
To the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well,
Here it is.
So I think if you look at the 3 and 6 month.
You guys ready? Y'all are witnessing history. Here's my next.
We're quoting the 12 month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps For example, you know, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls,
There you
out
go.
of the,
I'm gonna embellish it a little bit with some delightful
so it'll literally be
text. And let me go ahead and
We understand
favorite
that.
this.
Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the
There we go.
non-housing services and goods.
You love the historic fixes on the chart.
80% of that
Am I betting on my own predictions? Oh, dude. Yeah, no, I always have.
levels they were at the last time.
You haven't seen.
Sustained 2% inflation,
Oh,
which
oh,
is
my friend.
in the
Oh,
early 2000s for
you haven't seen this?
7 years.
Oh,
So
hold
they're
on.
at that level. What's not is housing services. So let's talk about housing services. Housing
Oh,
services is
all the time. Let me show you. Oh, let me show you.
you know,
Number one, I'm longing,
leases,
absolutely longing.
very low inflation.
Let me show you some content that I made.
Leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's
Here's a video series I made in.
the thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a
When was
very tight
this?
economy. What is the story about inflation?
October
That catch-up inflation
25th, 2022,
in several other areas. So you're seeing we're not
where I made between 800 and 1500% on a bunch of options trades. Each one of those trades was $100,000-ish bet.
around 2%.
These are videos like I made 800% on NVIDIA, 1200% on JP Morgan, 1000% on QQQ. Calls.
At this point, now that we're
Is that the private?
in the process.
Oh, hold on.
So you're quickly trying to get to that.
That's weird. Hold on.
that you see, or do you foresee that you have some time to get there?
Nothing in the
Let me
economic
unset it
data
to private.
suggests that the
Where is
committee has
my-
any need to be in a hurry to get
Hold on.
there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. and we're
Why
watching
on
it
earth
carefully,
is that set to
but we do
private?
see maintaining strength there.
And now it's public.
And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific. meaning,
Okay,
but
here's another one.
To the extent
The
that
prediction I did the other day in the summer at June when I said we're still going up being bullish.
of that, as we try to navigate
We had monthly maps showcase
through risks.
a small amount of bearishness in the short term, which I did bet on.
Craig Torres from Bloomberg.
Um,
Questions today. Did you learn anything about
Here.
what Americans think about the
Again,
economy?
I use monthly maps to make that trade as well.
First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the
I made-
maximum side of the mandate, Chair Powell.
How do I
So the
turn this
unemployment
volume
rate
down?
has been
Jeez.
at 4% or higher for
Here
6
we go.
months. One of the broadest measures of unemployment is up about a half a point from a year ago.
So this was whenever we were in a strong bull market and monthly maps suggested there would be some very rapid volatility in NASDAQ. I bet on it.
Heading down to that bad neighborhood of the 20 teens.
So whenever I make big bets, I'll do it in options. Whenever I'm doing my day trading, it's always in futures. We're at 6,000 S&P right now, by the way.
Is unwelcome. It is
Love it.
cooling
Yeah, so this particular day, just in a single day, I made, on a 10K bet, I made 32K.
Thank you.
Sure. So on your first question, I'm not going to talk about anything.
And then the following day, I made another 10K. So I turned 10K to 50 just in 2 days, just trading options. And I usually throw, depending on how, and I talk about all the same stuff I do, using just monthly maps. Yeah.
You know, there's nothing really surprising.
So when I get those big pivots like that, I usually just hit them with options because I don't have to be exact on the exact entry date. I just buy I swing some options with 2 or 3 week expirations.
So we've seen a big change upward and
And then I just leave them alone while I day trade with my futures account. The one thing I don't like about options, the best thing is I can set it and forget it and just let it play out. The bad part is that Uncle Sam takes more of my money.
it's continuing to very gradually cool.
How do I pick what stocks to trade when you're trading with monthly maps? So you pick what stocks to trade based on the scanner, and then you use the monthly maps to confirm how far out they go. An example is The scanner, I want to look for bull setups. So I'm going to go here and look for bull setups for today. And we teach you in the scanner class. Liquidity map. Or actually, let me show you. Let's look for some breakout plays, right? So let's look for these two right here. MHP breakup and hedge pressure equals MHP. These are all your breakout targets today. Let's look at Meta, for instance. Meta's on the list. Okay. Meta has created a certain type of move where Meta has broken through. Anytime you break through this orange line, the market dynamic has shifted from gamma positive to negative on a monthly scale. The orange is monthly. And I'll go to monthly map on Meta and see what the monthly map looks like, and that you can see that Meta right now has bull side increasing, bear side decreasing. So Meta has 2 weeks of strength on that breakout. Right, that's not it. And then I say, but look at this. 2 weeks from now, bulls liquidate while bears are shorting, or bears are squeezing. So volatility will be present as early as 2 weeks out. So finishing this week and next, I'd be willing to say Meta's got a nice little run up, at least for the next 2 weeks. That's how I do it. Just who says that makes sense? ED is closer SPY. Yeah. They use the levels on other commodity futures during bullish seasonality. For what though? Like,
Hi, Victoria.
Which levels are you talking about?
Some of the president-elect's advisors have suggested that you should resign.
So yeah, I usually
would you go?
who's this? I go into I usually look for MHP breakouts or illiquidity pockets with hedge pusher breaks, things like that, to start a move, and then I go to monthly maps to confirm the move. No, Michael, you said, do I ever use the levels on other commodity futures during bullish seasonality? So I only trade S&P and NASDAQ, if that's what you're asking. Boom, hit there. All right, so 88% of days we close below the bands, 4% of days we close above.
Other officials around the country. What did you hear today from the regional bank presidents about what consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much.
I don't short off of the DD band, even though it can pull back. If this ratio is greater than half, I don't short it.
Feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing what 2.8.
Larry Williams, and it's insane on the return he got on some of his commodities trades. Who is Larry Williams?
It's actually remarkable how well the U.S. economy has been performing.
Wait, is he the guy that got 11,000% in the Robbins cut?
Inflation coming down.
Is that guy?
Really performing.
Now it sounds familiar.
Our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of.
That's right. That is the guy, isn't it?
I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty.
Yeah.
Say there are areas of caution, and
that I'm like that didn't sound familiar. And this is like some kind of thing where like his daughter also plays in the Robbins Cup.
If there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like.
His daughter was the actress.
Geopolitical risks around the world are elevated.
What was that?
Clearly, they've had relatively little.
One of those shows.
U.S. economy. Now that can change.
One of those WB shows.
But people talk about those as
like Felicity or something like that. One of those shows.
All the time. But ultimately.
One of those teeny bop shows. I remember which one.
Its performance has been very good, and.
Clarissa Explains It All. No, that was even before. Actually, I liked that show when I was a kid.
Next year, I've heard this from several people that
Dawson's Creek
could even be stronger than this year.
Melrose Place.
Hi, It's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion.
She was an
earlier
actress
on
slash
policy.
commodities trader. That's kind of cool.
Predecessors, Greenspan, and
Seventh
Volcker,
Heaven. Yeah,
they
it's Seventh
got
Heaven.
large budget deficits,
Yup.
endangered
Yeah, well, that's whenever I was poor as a kid. I didn't have cable, so we had to watch like the WB and the CW and UPN. You guys remember all those networks?
budget deficits and debt
All the rich kids had cable.
historic highs that are.
Oh, we didn't have no cable in my house.
Is that something you'd speak out against?
I'd watch Saved by the Bell in the mornings, X-Men on Fox Saturday morning cartoons, and anytime after 9 p.m. you'd watch infomercials. You learn about slap chops, rotisserie grills, and Pure Mood CD. You guys ready for the latest hits of the 90s? I am. And much more. Call now and get one for a friend. Put it in a stocking for stocking stuffers. Michelle Williams, 5 times Oscar nominated. Really?
Important that we, that to be dealt with. It is ultimately a threat to the
I
can say
did
that.
not know.
We don't have oversight over fiscal policy.
What has she done?
Just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to
5-time
fire
Oscar
or revoke
nomination.
the president
Really? What is?
legality
Okay, let's
of
get
the
here.
president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not
She
one.
won 2 Golden Globes. Okay.
Thank you.
On, Marilyn Monroe, and she played in
Courtney Brown,
Fosse
from Axios.
miniseries. Okay.
Response to Howard's
Primetime
question,
Emmys.
You said it wasn't an ideal time to give
She was in
forward
Shutter
guidance because of
Island.
the economic uncertainties.
Greatest Showman.
Can
I
you
saw
elaborate
that.
What
Guess
some
I
of
didn't
those
know.
uncertainties are, and whether or not it includes some of the
The Fablemans.
proposals that the president-elect has put out on the campaign trail, tariffs, for instance.
No, I was not referring to the new administration's policies at all, nor will I.
Academy Awards. She was in Brokeback Mountain, My Blue Valentine,
What I'm just saying is,
My Week with Marilyn, Manchester by Sea. Oh, I never saw that.
we know, as I
The
I mentioned this
Fablemans.
in my statement,
I never
that
saw. Oh, I did see a little bit of the
risks
Fablemans
to-
actually.
I guess
I didn't know it was her.
We think that the economy and we think our policy are both
Cool.
in a very good place. A very good place.
And she fucking smoked the Robbins Cup on top of those accomplishments.
You say, what are the risks?
Way to go.
The risk is that we would move too quickly.
Was that really her trading, or was her dad trading her account?
And inflation comes back, and we lost our chance to get inflation.
Kind of hard to believe you'd be like a Hollywood actor or actress.
To avoid that risk,
You'd have a knack for playing the stock market. Hey, maybe.
the risk is that we move too slowly, and that
I think you wouldn't.
the labor market to weaken too much and do unnecessary damage to
Maybe it was
labor
that.
and to people's working lives.
Dawson's Creek. Oh, what's Dawson's Creek?
That says don't get behind the curve. So these are
You're
two-
pretty sure she was married to Heath Ledger?
the two
What?
risks
How
that
come I don't know
happen.
anything
So
about this
we're in
person?
the middle there. We try to be in the middle and deal with
Like,
both
I,
of
he
those.
doesn't even look
Both of
familiar.
those. Again, the idea
Maybe I
is
just
to
never pay
maintain,
attention.
Support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable
Okay.
further progress toward our 2% inflation goal. This is a thing we're meeting by meeting. We're going to be making our assessment of
Dang, she's been in a lot of
what the
movies.
right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy.
Probably Tyra gave her
We don't know
pointers, yeah.
exactly where that is. We only know
Matilda
where it's
Ledger.
close.
So, oh, she has a daughter with Heath
I'm
Ledger.
pretty sure it's below where we are now.
You know, Larry always thought it was cool how successful his daughter was.
Uncertainty about
Yeah,
the
honestly,
process and
like
we're gonna
I'm very like reading about her. I'm completely blown away. She's a fascinating individual.
that we will get it
I just reading about her life. She seems like a multi-faceted, multi-talented, high IQ, high functioning person. That's cool. Acting credits, acting nominations, Academy Award nominations, 5 of them, and then whips all of her asses in futures trading. To boot, like that wasn't good enough. It's gonna be better than everyone else in futures trading too. She was like, oh, let's just do that hobby also. That's crazy that Larry got 11,000% gain in a year for the Robbins Cup. I mean, it's not unheard of.
be concerned if we thought we saw
It compounds, right? The ETF contest, I got 500%
at a higher
or
level.
400% gain in like
We're
2 weeks, 3 weeks.
surveys and market readings.
If you trade hard enough and the market rolls in your favor and it's a nice bull market and
Earlier today, and it's probably
You get lucky. It's not impossible to have a dynamite year like that. It's not normal to get that all the time, though.
PCE inflation. So that's one. That's
Yeah, what's your hobby? Yeah, I just fuck some kids up in the futures markets. No big.
And really have throughout this in a place that's consistent with 2% inflation. But
All right.
To say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Best quote ever.
Hi, Chair Powell. Kelly O'Grady, CBS News.
I guess she doesn't look familiar, but she's been in a million movies that I've seen. Maybe I just never pay attention.
Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy's.
Let's see what's the thing. Trading.
But we also know that people are still.
It's actually in the Wikipedia. Having learned to trade under her father's guidance, 17-year-old Williams, 17 in the Robbins Cup World Championship, a futures trading contest with a return of 1,000%.
And it stays with you because the price level doesn't come back down.
Gosh, that's fun. She's like, what makes you just want to like enter the Robbins Cup and spend a whole year doing that? Is if you're making movies and busy with that.
Inflation has come way down. The economy's still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
Yeah, I don't short this market.
President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not gonna get into any of the political things here today.
Yeah, because you don't want your job to be Yeah.
Hi, Chair Powell.
You don't want to say anything about.
Marketplace. What is
No.
your plan if we start to see
Like Trump wasn't a big fan of him, if I can remember correctly.
So that's
Towards the end of the presidency.
The whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a war where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about
Dawson's Creek. Isn't that one that is that the I don't want to wait. I don't want my life to be over.
Even though now inflation is back on a path to 2%.
I'll be right back, guys. Hold up.
For the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up.
No, that's not the way our framework works. We're
Watching up FOMC live.
Inflation.
Say hi. In the chat.
We did not think it would be appropriate to.
Hi, Doc's going on trip.
To deliberately.
You out of here? Cool.
And part of the problem.
Oh, it's here on the screen.
Inflation can be a problem too.
There's chat. There's Powell. There's my stream. Who's this guy? Listen to her. That guy?
Yeah, that guy. Who's that guy?
Ben Bernanke.
I don't know who that is.
You know who that is?
What does he do?
That's Powell. That's Jay Powell. I say Ben Bernanke of all people to say.
I don't even know.
Everyone's saying hi. He's the leader of the Feds. Remember, we call them the Feds all day long.
Feds?
Yeah, the Feds.
What did the Feds say?
They're cutting interest rates, but our mortgage rate isn't going to be affected yet. Probably.
Is it gonna be the same?
Probably the same.
At 7%?
Yeah, it's lame.
Why?
Because they suck.
What do we need to do?
Everyone's saying hi to you, by the way. Nothing. No, this is a press conference they do every single month.
So we're screwed either way.
No, we're good. We're good either way. The economies can get better.
Okay, well that's good, I guess.
Yeah.
Well, I'm gonna go fly to work and come back tonight.
Go make that money.
Bye.
Later.
Bye, chat.
All right, let me walk her out. I'll be right back. Don't go anywhere. No trade. Nope, no trades today. No trades today. I didn't get a good long entry signal, and I just waited all day for it. I'm waiting to see. Like I said, I was hoping we get some kind of pullback to long off of, but the market's just going straight up with no pullback. Kind of sucks. Don't short the bull market. Oh. Bull market boring. Trickle up, trickle up. Market was just hesitating to wait to see if Powell's going to say anything bad, which he wasn't. Yeah, there's no shorting this. There's no coming down. This market's going straight up, like I said. If you're here. On that note. Okay, so no Zoom call today. I guess we'll take the day off. Since we've just been streaming all day and doing this. I'm getting a little, my throat is getting a little hoarse from talking too much. We'll do the Zoom call tomorrow. It's usually very excitable. I'm starting to get hoarse. What a crazy day today. Any new news on the fast track stuff? They're offering refunds, right? Texas holding them all in. Michael Benny, so you only get DD ban if you connect a futures account. That's the only way they draw. So you need futures data for them to draw on your chart. That's one thing that you might not have. You got to connect your CQG account, which usually will have like if you have a broker that works with CQG, and pretty much almost all of them do. CQG, yeah. So Phillip, Dorman, Iron Beam, Cunningham, Robbins, Amp, Edge Clear. I like the most common ones people use. All right, y'all. I love y'all. I'm going to get out of here. Bye. Boring ass Fed day. See y'all tomorrow. No Zoom call today. It's because we live stream. I'm getting hoarse. And just save my breath. See y'all in the morning. No trades today. As expected. I love y'all. See y'all later. Bye.